Hi, everybody. Thanks for joining us. I'm Ken Kirschenbaum. This is our part of our webinar series. Today we have Tim Meekin from DealerAlly, which is a lender to the alarm industry. He's got a lender program that he's going to tell you about. And those of you that are interested in financing, this is an option that's available to you. I'm going to turn the presentation over to Tim and let him get started, because I know you guys didn't join today to hear me. So here we go. Tim, I am making you a presenter now, and it's all yours. Oh, anyone have any questions? Please type them in, and I will read them and interrupt Tim. If at some point we think a dialogue between you and Tim is necessary, we will, or appropriate, or entertaining, we will unmute you. Okay? Okay, so Tim, it's all yours.
Okay, oh, there we go. Can you see my screen?
Yep.
Okay, perfect. Appreciate you setting this up, Ken, and appreciate our partnership. And so as Ken introduced me, I'm Tim Meekin with DealerAlly. Been in the industry a long time, since 1990. So we really found that I started DealerAlly 4 years ago, as I really saw that there's a huge need in our industry for good capital solutions. And so I had talked with a couple of dealers that actually started using consumer financing back in the worst time possible, around 2009. You know, with the builder crash and the market crash. And he said, it's the only time I really ever made money in this industry. And because I was able to do so without debt and recourse. So what I'm going to do is I'm going to run through just a quick, I want to kind of educate you a little bit on what consumer financing is. It's starting to get really popular in the security industry. So I'm a security guy that provides financing options, not a financing guy that doesn't know security. So worked at GE Security / Interlogics for 18 years in national accounts, sold for AT&T long time ago, Honeywell Home and Building Control. I'm out of Minneapolis. So anyway, with that, I'll get started. Here's my contact information up here. You can reach us at DealerAllyProgram.com, Meekin at DealerAllyProgram.com, and my phone number's up here as well. So, who is DealerAlly? So, we pride ourselves on being a technology company. We have we're built on Salesforce and AWS, Amazon Web Services. So we've been developing for 4 years. We continue to look for more and better integrated technologies to make this whole process easier for you. Got about 180 dealers right now that use our services in the security industry. About 95% are in the security industry. And so we're always looking for ways to improve and to make this process easier for you to pitch this on every deal as an alternative, as an option, an affordable option to your customers to close more deals and upsell more. We have an open API. I'll go into that in a second on what we're doing with that. And we provide capital solutions for residential and commercial customers. We have one commercial lender right now. We're adding more. We're really heavily focused on residential. That is, as time goes on, that we hope to get that more of a 50-50 combination. And on the residential side, it's quite different, as I'm sure that you're all aware if you've ever used consumer financing or if you've ever used commercial financing. They're two totally different animals, but both are necessary in helping us close deals and provide an affordable way for the consumers or business owners to buy our solutions. So again, the goal is on the residential side is to provide an option whereby there is no debt. The one thing with consumer financing is it's non-recourse. So there's no holdbacks, chargebacks, pass-throughs, guarantee, really guarantee periods, chargebacks, all that. It's truth in lending. Consumer financing has been around for a long time. We're just using this now as a vehicle to help us go in with a no money down solution with low interest rates and affordable payment. What that does for you then is that if you're looking from a security standpoint, that can help you make money on every deal up front. Instead of subsidizing the deal, borrowing money, you can cover your creation costs, you can make money on every deal. Our average deal right now on the security side is about $3,700. That translates into a payment of about $37 to $45 for the equipment side, plus any monitoring that you'd like to add. So increased profits, reducing that debt because of the non-recourse aspect of it, and really build wealth and close more deals. So again, we sell to residential homeowners, and we do have a renter program and commercial customers. So our primary focus is on the smart home systems, detection, video, CCTV, energy management. We have a lot of dealers that do AV. And then we have also different promotions that allow you to bundle with other products. We have dealers that do water and security, or maybe home improvement, some sort. So we have promotions for that as well. So again, the idea is we just don't know upfront which one, if our customers have money or not. At the end of the day, about 65% of the people, consumers, carry a credit card balance every month, and about 35% pay it off and take advantage of rewards points. Of course, we would never turn down, the option for someone to, pay cash or pay with credit card. But we just don't know. We just don't know who has money and who doesn't have money. So, in the spirit of why the dealer programs, when they came on board back in the Alert Center / ADT days, 30 years ago, they came in and they were able to pump, a lot of volume, with a no money down solution. So we're taking that track, and we're also taking that track. I look at it like the cell model as the most primary parallel to what we're doing here. You pay for the phone, you can choose whatever phone you so choose. There's different prices for those phones, and then you have to pay for the service, for the voice and data. So it's smart homes with the cell phone model. Again, I talked about the reduce or eliminate debt. Debt is where it belongs. It's with your consumer, not with your business. So it enables you to grow from there. The DealerAlly portal. So I'm gonna show you a quick video of a tool that we launched about a month and a half ago that we continue to improve, and we're at a great point right now. Our dealers love it, and it's a simple strategy because people have asked me over the years, that sounds great, I love it, no recourse, no money down, affordable, I love it, but how do I sell it? So I'm going to show you a tool that our successful dealers use, and a little later on here, to give you an idea. It does all the work for you. It does all the calculations. It does all the work for you, really. And it's something very easy for you to follow, customer-facing sales tool. So again, technology, it's all about technology. We're in the process of integrating right now with 3 CRM companies, WeSuite, Security Tracks, and FillQuick. We have several other discussions. We do have an open API. What that is going to mean for you is that you'll do everything within your CRM. So you're already plugging in your customer information. You don't need to do that a second time. You'll be able to get a credit decision from your CRM, track what funding stage it's at, In some cases, do all the electronic paperwork. Everything's electronic. It could be either in person or via email. And so We Suite Security Tracks and Fill Quick are all coming out here in the next 2 months. We're doing soft launches right now, and then we're going to roll that out across the board. And we're really excited about that. It's just another step on making it easy. We have different programs. We have two lenders right now on the residential side. We have hard pull programs with low interest rates and low payment factors. And we also have soft pull programs. You know, we have a lot of, we're the exclusive provider for the AIN group. There's a lot of a lot of dealers there that do a lot of builder business and new construction business. And one of the biggest things there is, hey, I get a chance to meet with that customer before the closing on that mortgage, but I cannot do a hard pull. The builders would kill me because that could affect their credit and jeopardize closing. So we have programs designed for a lot of different niches. I'm going to cover the overview, get into a little bit of specifics, but I just want to give you a taste, you know, for what options are there for you. So when we talk about the most important thing as we've seen over the last 4 years is it's really all about the affordable low monthly payment. And in order to do that, you need to have a low payment factor. Payment factors are very, very important because it makes your payment low. You know, you look at, there are some companies out there, you know, averaging $4,000 or $5,000 a deal. They have higher payment factors, and their average monthly is $140 to $160 a month. Ours are much, much lower than some of our other competitors, all the way down to 1%. So if you have a $2,000 minimum payment, it's a finance solution. It's only $20 a month. It's very affordable. You add that on with your monitoring rate, let's say it's $35, your total payment is $55. So the reason why I have different areas here, $1,450 for $1,000, is these are the different promotions, which I'll talk about here in a minute. And this is the minimum payment. This $1,000 is 1.45. The $2,000 minimum starts at a 1% payment factor, and then the $3,500 minimum starts at 9.9 fixed for the term. So 5.9% is a very, very popular program. One of our main lenders, Aqua Finance, they're owned by the Blackstone Group, which is a behemoth. They're very, very big. They got started 30, 40 years ago in the water business, financing water systems. The average water system is $5,800. They have the majority of the market share, and 80% of their dealers use this promotion. It's very, very popular. What it enables you to do is come in with a very, very low interest rate of 5.9%, much lower than anybody's credit card, and a super low payment for the first 12 months. And it does move from there up to 13.99 after starting month 13, and the payment factor moves to 1.5. But what they found is that on whole, the consumers end up paying it off in 18 months on average. Now, you already get your money up front, but obviously it's a popular program that, you know, that's doing its job. People are taking advantage of that lower interest rate, and then, you know, paying it off before the interest rate moves up. And and if you look at it from a security standpoint, an RMR standpoint, $1 in financing pays up to a 97x net multiple for an A customer. That's amazing when you think about it. I mean, if you're selling a monthly payment, affordable monthly payment, and adding both service and product, and you're getting a 97x multiple on that, that's one of the reasons why it is so popular. That's for an A customer, which typically starts at about 665 FICO. Also, but our lenders, they look all the way down to 600 FICO. There's additional, there could be an additional credit risk based on the credit worthiness of the customer. But on a blended basis through all of our dealers and all of our book of business, we're sitting at about 93.6% blended. So that means that on a $1,000 deal, you would get $936. So what most dealers do is you get charged 3% on a credit card. They take that into effect and just manage their pricing that way. They might add 7% to their pricing to cover credit card fees and financing fees. So when you talk about consumer financing, it's kind of important to know there's a couple of different formats. One side is always fixed and one side is variable. When you, if you're playing the game of you always want to give the dealer 100%, then it's variable on the consumer side. For example, someone coming in at a 605 FICO, in my program, we get 5.9%, and the interest rate doesn't change, and the payment factor doesn't change, at least for the first year on that. My other programs are fixed. But if you look at some of those lenders, they might say, okay, yeah, you're approved, but you're at 24% with a 3% payment factor. And so you have no way to really manage your business this way and sell a monthly payment and provide that monthly payment to your customer up front because it's variable on that side. So when we looked at all of our lenders and came to the realization that we wanted Aqua Finance and Pinnacle Finance, they provided this solution for us to have it fixed on your side, variable on your side. And you can always manage that by pricing, by the way you price to your customer. Some of the other our competitors out there, a lot of merchant companies out there, they have a lot of kind of games with that. They might start off with a teaser rate, then if you miss a payment, they might increase your interest rate up to 30%. Ours is straight financing. It's not merchant. It's not credit card driven, and that doesn't happen with our lenders and the DealerAlly program. Another promotion that dealers love, we have same as cash options. They're used quite frequently, and dealers and consumers love them. It's free money, to the consumer if they pay it off, and most do pay it off. Typically, the definition of it is that interest accrues from day one, depending upon what the promotion is what that interest rate will be. And then if the loan is paid off by the end of 12 months at a 12-month same as cash promotion, all of that accrued interest is forgiven. There's 3 months, 6 months, we have 24 months, we have 36 months same as cash programs. The most popular by far is the 12 months because the higher ones do cost you more to take advantage of those promotions. 1 year is what we found works the best. So Aqua, and I'm focusing on Aqua today, has a revolving program structure. It's how we're able to get very low payment factors because it's not a closed-end term. Just think of it like a credit card or a line of credit. We want to give the customer an affordable payment, and we don't know their budget. We don't know if they have, if they're one of the 65% or the 35% that pays off their credit card or not, what the interest rate is if they do carry a balance. So we're going to put all that in their hands, and they can pay off our loan when they want to. Principal is paid down with every payment, interest and principal. But principal is paid down, and any additional payments that are made go directly towards principal. Think of it like a mortgage, or like your credit card payment or a line of credit. And you're going to get, it's all truth in lending. It's all fully disclosed. You're going to get you have access to a site the consumers do to see, what part of their payment applied to both interest and principal, and all above board. So, and then the first payment is made to the customer 30 days from the loan completion certificate is done. Model specifics. Again, we're fully automated. If you happen to be with one of our API integrated partners, you would start there. In some cases, you would do everything within that platform. In other cases, you might get the credit decision, check funding stages, upload some documents, and then hyperlink over to our portal to do the DocuSign paperwork, all the electronic paperwork. So again, it starts at 600 FICO. So we're taking, the majority of the creditworthy customers and are in play here for non-recourse financing. So typically what happens is you're going to get, you're going to submit a loan application and you're going to get an answer back within 60 to 120 seconds. And Aqua's very aggressive. If it steps into a manual review, it's because they're not an algorithm only type program, which a lot are. And obviously, if it's algorithm only, then that's going to benefit them, not benefit you. And it's just impossible to get the majority of the credit decisions without having a manual review process on deals that are in the middle. You get more deals approved and you get paid more. Homeowners, we have financing available from $1,000, which is a payment of $14.50, all the way up to $85,000. And we also finance renters from $1,000 to $5,000, all the same terms as homeowners. There's no more discounts or a different promotions or formula. They're all the same promotions. That's been very popular as well. So if we dig a little bit deeper, when we start, we have 3 programs. Program 1 goes from $1,000 to $3,500. It's 11.99% fixed interest rate until they pay it off. Payment factor is 1.45. So a gross example, a $25 monthly payment divided by the payment factor equals a financed amount of $1,724. Program 2 goes from, I screwed up, it's $2,000 to $85,000, apologize. Starts at $2,000 and it's 5.9% with a 1% payment factor for the first 12 months. So $2,000 deal is $20 a month. And then if it's not paid off, starting month 13, the interest rate goes to 13.99 and the payment goes to 1.5. So that $20 payment turns into a $30 payment. Program number 3 starts at $3,500 and it's 9.9% fixed APR with a 1.25% payment factor. So a $45 monthly payment is equivalent to $3,600 financed.
Tim, I just a number of people are a little confused. Are you supposed to be changing the PowerPoint page, the slide?
Oh, yeah, you're not seeing anything?
No, you're not advancing the slides. It's been on the same thing all along. I didn't know whether you wanted
Yeah,
to.
I've been advancing. Shoot. Okay, let me see here. Okay, so let me see where I would.
Begin slideshow.
What's this? Where is begin slideshow
Up
here?
on top.
Okay. Okay.
All right, so since we're recording this and people will be able to catch the recording once we post it on our website, what you can do, why don't you start at the beginning, and that way you can just rush through it, but they'll be able to review, watch it, stop it, read it, and spend a little bit more time with it during when they see it on the website. All right, so back to you. Good luck.
Okay, so tell me if you can see this then.
Yeah, you're there, but now let me see if you can advance it.
All right.
No.
Can you see this?
No, you got to advance it. You got to hit your arrows to move it to the next slide. There you go.
Yeah.
Now you're moving it.
Can you see it now?
Yeah, you're moving it now.
Okay.
All right, why don't you go back to the beginning and then.
Okay, I'll cover this. I'll just cover this really quickly then, up to where we were.
Great.
Okay. Okay. Okay, I'll just cover the slides really quickly. Again, technology company built on Salesforce and AWS, residential and commercial customers, you know, so we have, shoot, I just knocked it off here. Okay, so we have, I'm trying to move this out of the way. 1 second here, having some issues. We'll get her back on track. Homeowners and renters, cover all the industries, focus in on security and AV. We have other verticals in play. The idea is to close more sales, attract new customers. Our integrations with WeSuite, Security Tracks, and Fill Quick. No recourse. Hard pull programs with low interest rates, soft pull programs for new construction. Low affordable monthly payments is the name of the game with low interest rates. The 5.9% program, which I've talked about, pays up to a 97x net multiple. We're fixed. When you present this program, you are it's fixed for you, so you can manage this program. It's not a variable on the customer side. The customer is always going to get that promotion that you select with that interest rate and payment factor. Talked about same as cash. You know, how that's just a great promotion that people take advantage of. We talked about a 600 FICO score that starts there. And we look at this on a blended basis at 93.6%, means you get $936 on a 1,000. Also, you know, feels like a credit card or line of credit. The customer controls the budget when it's paid off. They can pay it off when they want to pay it off. There's no prepayment penalties. Principal is paid down with every payment. We're not an algorithm-only based program. We start with an algorithm, and probably 75% are determined based on algorithm, but then it goes into a manual review to get you more approvals and to get you higher payouts. We finance homeowners and renters. These are the 3 programs that we have. Fixed program 1 and 3 are fixed interest rate of 11.99. Program 3 is fixed interest rate of 9.99 with low payment factors. The example here, when we're talking monthly payment, $25 is equal to $17.24 in finance. Program 3, lower interest rate, lower payment factor, $45 is $3,600 in financing. And program 2 is our variable program that we talked about and how Aqua uses that on the majority of their deals, their water dealers. In specific, $5,800 average system. Consumer pays it off in 18 months, and it pays up to 97% for an A customer. Very low payment. So when you look at this on a net basis, we've just caught up here. When you look at this on a net basis, it's the same from the gross example. So 93.66% blended means you make 1613 of the 1724. You make 2340 of the 2500 and 3369 of the 3600. So that's a lot of money in your pocket. We fund every day, Monday through Friday. The funding cycle, again, it starts as automated. Then what our dealers typically do, if it goes into pending or declined, if it goes into pending, you can wait for Aqua to come back and provide a decision to you, or you can pick up the phone and call them and move to the front of the list. On average, it's about 3 minutes. We get probably, of the decline deals, we get a third of those approved. approved after initial decline. So it's always smart to call. Then after the system has been approved, you do the paperwork, install the system. There's a loan completion certificate that's all electronic, or you can do a hand sign and take a picture and upload it. Then there's a quick verification call done by Aqua to the customer on a lottery system basis. Aqua pays DealerAlly, and then we pay you either ACH money into your account, or we can wire it into your account. The only other documentation that's required is if you have a security system involved, then monitoring. We need the first page of the monitoring agreement. The lender does not want to finance the service end of it. And that's a great idea for you too, because whether you're selling this rate or you're holding this rate, you know, that's cash flow for you, and you know, that paper's worth a lot of money. That's why a lot of us are in this business, instead of selling it and having to accrue for, you know, the monitoring costs and the interactive service costs, et cetera. So we call our program where we divided our interactive split type program, you know, where you've got your own, there's two payments that the customer is going to make. They're going to make one to you, they're going to make one to the finance company. It is no different than you going to get a cash deal right now for $500 or $10,000. It's your billing. It is your central station account and your interactive accounts, and you own 100% of that account. So you have the option. You can use us, and we have dealers that use us and they sell the paper, and we have dealers that hold the accounts, aggregate to achieve a higher exit multiple. That's probably 75% hold paper. They use this as a vehicle to recruit more, get more money in the, you know, bring more money in, and bring on more accounts. This is just a quick example, you know, holding versus selling. On a selling basis, if you look at the same monthly payment that, you know, if there's any dealers on here that are in dealer programs, our dealers are typically making about $1,000 more when you figure at the same monthly payment. If you were to sell for 65, you know, to XYZ dealer program, then, you know, and in turn you're selling it to them for $40 and doing $25 in consumer financing. It allows you to add a lot more value, pay higher commissions, add more value, and really and take advantage of not having a ceiling on it and not having to ask the customer for money down. So here's our approach, and this is the tool I'm going to show you right now. So I'm going to step right into that. Ken, if you could just let me know if you can see this screen. I just want to make sure that everybody can see it.
Yeah, you're good.
Okay, so this is our portal here. This is our staging environment, and this is what we call the CPG, our customer proposal generator. Again, the objection that I had heard for the last, you know, 4 years was, program sounds great. You know, I can't see any negatives, really any glaring negatives to it, but how do I sell it? So what we do is we have a template that we'll send you that has a, you know, I don't know, 1,200 parts on it. At the end of the day, then what you'll do is you'll take that template and you'll highlight the parts that you use, make the price your own, and then add any additional parts that you sell. So this is XYZ dealer's price list here. It has all their parts in it at their pricing. And so that's how we start the process. Then what you do is typically when you buy more, you buy more equipment, you get a better deal. So as I'm going to show you here in a second, you're able to, one second here, I lost it for a second. You're able to create bundles. For example, a silver automation package is an edge panel, 3 doors and a motion for $1,200. A platinum package includes a lot more equipment, 9-door windows, 2 motions. You get the idea. We're building this around the promotions: $1,000 promotion, $2,000 promotion, $3,500 promotion. as a baseline. You could go start a la carte across the board on this. Typically what our dealers like to do is offer about a 10%, 10 to 15% savings on a bundle versus a la carte. That's your choice though. So that just shows that. Then you plug in your monitoring. Whatever it is that you go to market with, maybe you have a standard monitoring package. Maybe you start with a standard and then you upsell, two-way voice is $4, home automation is $3, etc. And then from there you create a package. And what a package is basically a bundle plus monitoring. And you're able to add several bundles. You could have a home automation bundle. You could have a CCTV bundle. You could have a home theater bundle for $6,000. 4 cameras and a DVR for $2,000. Whatever it is that you so choose there. So when you come in here and you just you could click on new application and send the information and collect that information, or you can start off with a new proposal. It's a customer-facing tool. It works on a phone. It's more elegant on an iPad or a computer or a template some sort. You plug in the basic customer information and their email address. And then now you have these preset packages. So when you go to dealer packages, you got your different packages here, which populates the screen. You want to start with a diamond package, then it brings this package into play. It also locks in the lender, either Aqua or Pinnacle, depending upon if you're with one or the other. You might be with both. Then it locks in the promotion, and you can always change a promotion. So you could change it. If you see when you change it, the price changes down here. It's $34.34 for the 11.99% promotion. It's $23.68 for the 5% because the payment factors are different. You're also able to just show the monthly, which a lot of our dealers do, and back into the value of the system. So you start with a base and you can add products. And they wanted a CO detector. So their CO detectors are only $1.50 a month. We want one for each level. No problem. And so on. You can delete parts, you can add parts, and you come up with a total monthly payment. Now, if there's a security system and you have RMR attached, you have your monthly payment for the RMR. So this is what we call our simple strategy. You build this package as a monthly payment. You add your interactive services. If you want to add any a la carte services, you're obviously free to do so. And then we go into the pitch. Mr. and Mrs. Jones, your total payment is $65.17. And just like your cell phone, you have two payments. You have one for your product and you have one for your services. In this case, our cost for services are $36.99 and the product is $28.18 a month. We'll be billing you for the services and the lender will be billing you for the products. The system's valued at $2,818. There's no down payment today. If there were, then you can add that in and it'll change the monthly. Now your monitoring, this can be what you want it to be, is 12 months and you own the equipment. Then after you get done paying it off, just like after you get done paying your cell phone off, that line item drops off and you're only paying $36.99 for the voice and data. It's the same thing here with us. Once you pay it off, you'll be saving $338.16 a year because this payment's going to go away. So this is a tool that's been very, very popular because it does all the math for you. You can create the bundles, you can create the packages, you can add a la carte, add, subtract, and keep it very, very simple for the customer and talk about the total monthly payment and then break it down. And then from there, you create a new application. Now it's going to red box it because I didn't answer, I didn't put everything in. But if I were to put it in and go back, then what it's going to do is copy all the information over to the application. And our application is one application. It's going to bring that information over. We need to ask additional questions: social security number, date of birth. How loans are basically determined is based on FICO score and debt to income. So so we need to get that information. They're employed. Their gross monthly income is, whatever, $8,000 a month. Do they own or rent, et cetera? And then you continue. It's going to carry over the loan parameters of that proposal that you just did, and you can always modify it. And then you get a funding decision and go from there.
We have a question. What are the payment term length for this? 12, 24, or 36 months?
Okay, so there's two different payments, keep in mind. You have a payment for the monitoring, if applicable. You don't have to use monitoring. You can do a standalone, CCTV system. And you have a payment for the financing. So the monitoring is what that's your choice. I have dealers that, do 12-month agreements with a 12-month renewal. I have dealers that do 36 or 60 months. That is your choice. And that's typically a fixed term that either renews month to month or annually. The finance, keep in mind, is a revolver, okay? So it's built on, it's basically a line of credit, or it's a line of credit, or think of it like a credit card. There is no fixed term. Now, we do have promotions with our other lender, Pinnacle, that does have fixed terms. But the benefit of a revolver is you're able to get a lower payment factor, like your credit card or like a line of credit. And everything's disclosed, and you can pay it off when you want to pay it off. So the answer to that is, it's not a closed-end term. It's a revolver. You have a minimum payment. Any additional amount that you pay will go directly to principal, and you can pay it off when you want. Any other questions? No other questions?
None yet.
Okay.
So have you concluded your presentation?
Yeah, I'm almost done here. I'm almost done. I just want to show just what some other dealers are doing. When they build these packages, because the idea is really to sell more value and provide more sometimes we get a little bit nervous about providing too much because we don't think that the customer has any money, but now we have a solution for that. And so why not provide a lot of value and interconnectivity? These devices, as we all know, all work together, and 1 + 1 = 3 concept. So there's just upselling. We're typically seeing good 30% upsell because we're giving an affordable solution. And then so we have different tools that we can share with you. This just talks the life of one account, and over 5 years that you're making an 80.71 multiple on that, because you're getting upfront, you're getting the RMR along the way, and then when you exit, you're getting that multiple. And then we have pro forma sheets that we can plug in a bunch of information for you, and you can have a 5-year pro forma based on what your revenue, cost of sales, margin, everything, all the way down, and you can plug in all these parameters and make it your own. But you can base it off of it. You have it, attrition, liquidation multiples, everything. So we're happy to provide those tools to you as well and walk you through that process. And then again, we have promotions that we can bundle, with other verticals, security and other vertical, or just other verticals. And that concludes my presentation.
Do you have criteria, you might have covered this, on creditworthiness of the customer?
Yeah, so basically our lenders start entertaining a deal at 600 FICO score. So if it's under 600, it's declined. If it's over 600, that's when they start entertaining it. So FICO score and debt to income those are the two primary factors. So typically they look at debt to income up to about 65%, which is pretty high. So they're trying to get you a lot of approved deals at obviously the highest payout that they can get you, assuming that you're shopping everybody and their brother on it.
Does the customer have to
so we get a lot of approvals.
Does the customer have to fill out a financial form?
They have to fill out an application that does include their, which I showed briefly, that does include their social security number. This is what needs to be filled out. This can be emailed to the customer.
Yeah, what's the turnaround time on that for approval?
If it's an automated approval, between 60 and 120, it's between 1 and 2 minutes.
So approval's pretty quick, right away.
Approval's pretty quick, yes.
Okay. You have a question here. Do I have to work? Do you, meaning you, Tim, and your company, DealerAlly, have a portal, or do they work with different lenders who have portals?
So this is our portal right here, and we're integrated with 2 lenders right now. So we have end-to-end solutions in our portal. So for example, so you only need to use our portal.
Okay.
For everything.
Where can I call to apply for the program, and how long does it take to start financing?
Okay. You can call me at these numbers down here. 651-925-7413. Or our office number is right underneath it. My email address is right here, Meekin, TMEEKIN at DealerAllyProgram.com. And if you want to get into more specifics, we can do that. I'll send you over an application. It typically takes about a week to get approved. You fill out an application, fill out an agreement, and then it takes about a week for the lender to come back with an approval decision. And then if you want to use our CPG, we'll get your parts, we'll get you set up, we'll get you and your whole team trained. And I mean, you could be up and going in as short as a week.
You know, it's interesting. Is it the dealer's credit worthiness, or is it the customer's credit worthiness that the banks are looking at?
Well, both. As far as the dealer goes, the biggest thing is service at the end of the day. They just want to make sure that these accounts are going to get serviced. So they do a soft pull of the owner's credit, and they look at how long have you been in business. If you've been in business under 2 years, they ask for a resume. Over 2 years, they don't need one. Are you licensed? Do you have a web presence? Any reviews? So they look at that with the main intention of, hey, this is going to be a lifetime partner that we want to make sure we have a good 3-legged stool here, and then that all of our mutual customers get serviced.
All of a sudden, those negative Yelp reports might have to be cleared up.
Yes. We get a lot of people approved. You'd be surprised. A lot of people that have been in business for 6 months or a year, but have been in the industry a long time and show a lot of history and experience. We do pretty well on getting dealers approved.
Someone in Texas wants to know if you work in all the states, and particularly in Texas.
I have a lot of dealers in Texas. We work in every state.
Where are you located, by the way?
I'm out of St. Paul, Minnesota.
Minnesota, because I think this guy's on his way up to you right now by car to pick up his first check. Okay.
I love it. I love it. Well, I appreciate that, and happy to answer anybody's dig deeper again and provide all the information. We're very transparent. We just try to add tools to make this process even easier to use, and we're here for you.
Well, good. That's what it's all about. Because this what I am devoted to trying to make these guys more money. That's what having some relationship with me and the people that I promote on here is about.
Yeah, and and Ken, you've been a great partner too. I send everybody your way. It's very important. Obviously, I have a lot of dealers that, let's say they've been in a dealer program, but they've always wanted to, hold accounts and build a business and build equity, and they need to get set up right. And so, I tell everybody to give you a call and make sure that you're set up right from the start, and don't overlook that, because it's super important.
Thank you. So now that I got that endorsement, now I can close out this webinar. That's what I was waiting for.
Perfect.
Okay. So I want to thank Tim. I want to thank all of you for attending. I hope you learned something. I hope that you found a lending partner if that's what you're looking for. And Tim is standing by 24/7. Operators waiting for your call. And I hope everything works out great, and I'm sure it will. And if it doesn't, I suspect I'll hear about it. So I want to thank everyone again. Tim, goodbye. And if you have a final goodbye, now's the time.
Thank you very much, and I look forward to speaking with you.
Okay. Bye, everybody. As soon as I can figure out how to close this out, we're gone.